All right, welcome everyone to the Deep Dive. We're your go-to for really getting under the hood of the latest earnings calls. Today, we're digging into the second quarter 2025 results from a major pharmaceutical player. We've waded through the numbers, pulled out the key stuff, and we're here to give you the takeaways you really need.
That's right. Our job is basically to cut through all the corporate spick, the jargon, and give you the actual intelligence, what you need to know, nice and clear.
Exactly. So let's jump right in. The headline numbers for Q2 2025. Give us the quick snapshot.
Okay. Well, they had a really strong quarter. Really strong. They hit double-digit sales growth. Net sales were up 11%, and that's in constant currency.
Okay, 11%. Constant currency. Got it. So that strips out the exchange rate noise.
Precisely. Gives you a clearer view of the actual operational performance.
And did that strong top line carry through? What about profits?
Oh, absolutely. That performance flowed right down. Core operating income up a very healthy 21%, again, constant currency.
Wow, 21%. That's pretty robust. Yeah. Margins too.
Yep, margins expanded nicely. Core margin went up 340 basis points, landed at 42.2%.
All right.
And for shareholders, the core EPS, that climbed 24% to $2.42.
$2.42. Solid numbers. What about actual cash? Did they generate a lot of cash?
They did. Cash flow was frankly exceptional. Came in at $6.3 billion.
Whoa.
Yeah, that's a 37% jump in US dollars. It really shows strong conversion from operations, turning sales into actual cash.
And looking back at the first half of the year then, was Q1 also strong? Did this momentum build?
It really did. The whole first half was solid. Sales up 13%. Core operating income up 24%.
Okay.
Core margin rose 370 basis points for the half, hitting 42.1%.
Yeah.
And core EPS for those 6 months, $4.69. That's up 27%.
And cash flow.
Free cash flow almost hit $10 billion, a 46% increase. So yeah, not just a good quarter, a really good first half.
Okay, so with that kind of performance, I assume they updated their guidance for the full year.
They did, yeah. They've upgraded the bottom line guidance for 2025. Now, sales guidance, that stays at high single-digit growth. But core operating income, they're now expecting that to grow in the low teens. They actually specified 14%.
Oh, okay.
Which is, a bump up from the previous 12% outlook. It's a pretty clear signal of confidence for management.
13 to 14%. Okay, definitely a strong signal. So those are the big numbers. But let's get into the story behind them. What was really driving things this quarter?
Well, I think the fascinating part is what they call the replacement power of their priority brands. These key drugs, they're really stepping up.
Replacement power, meaning they're making up for older drugs maybe fading a bit.
Exactly. These priority brands, collectively, they grew 30% in constant currencies. And if you pull out Entresto, which has its own dynamics, it's even higher, like 33%.
33%. Wow. Okay, so let's break down some of those stars. Kisqually, that had huge growth, right?
Kisqually was, remarkable, up 64% in the quarter. It's now got TRX leadership total prescriptions in metastatic breast cancer.
Leadership.
And the early breast cancer launch, that's got real momentum. NBRX share, that's new prescriptions, hit 61% in the US, 71% in Germany. It's basically the market leader now across the board for breast cancer stages, and guidelines support it strongly.
That's huge. What about Kisimta for MS?
Kisimta also showing really robust growth, up 33%, driven by strong demand. It's a self-administered B-cell therapy.
Right.
And management made a key point. Something like half of U.S. MS patients are still on older, lower efficacy treatments. So there's this big untapped potential for therapies like Kisimta, lots of room to grow.
Okay, makes sense. Now, Pluvicto, that seemed to bounce back, up 30%. What happened there?
Yeah, Pluvicto returned to strong growth. The big driver was getting approval for the pre-taxane indication in the U.S.
The earlier treatment setting.
Exactly.
Yeah.
New patient starts jumped 40% just from the previous quarter, sales up 25%. And interestingly, they said uptake in the community setting is strong. Like 9 out of 10 patients are now within 30 miles of a place they can get treated.
That's crucial for access.
It really is. Makes a huge difference.
Yeah. So Pluvicto's looking good now. What's next for it? Any hurdles or big milestones coming up?
Good question. They just announced positive phase 3 data from their PSMA addition study. It hit the primary endpoint radiographic PFS, basically slowing cancer progression.
Okay.
And there was a positive trend for overall survival, too. So they're planning an FDA submission in the second half of this year. They're aiming for approval in 2026 for metastatic hormone-sensitive prostate cancer. That would broaden its use quite a bit.
Got it. Moving on. Leqvio seems like it's on fire.
It really is. Up 61%. It's on track to blow past $1 billion in sales this year.
$1 billion, wow.
Yeah. U.S. growth was 47%, which is faster than the overall lipid-lowering market. But outside the U.S., it was even stronger, 74% growth. China's out-of-pocket market was a big driver there.
Interesting about China.
Yeah, and new data plus updated guidelines are helping push its use in patients after a cardiovascular event.
Okay. And Scemblix, it's the CML drug.
Scemblix keeps putting up great numbers, up 79% in constant currency, also heading towards that billion-dollar mark.
Another one.
Yep. It's gaining traction in earlier lines of therapy, still leads in the third-line setting globally. And get this, it's now the most used TKI for CML across all lines of therapy in the U.S.
That's quite a position to be in.
It really shows how well it's being adopted.
Okay, let's switch gears slightly. Cosmetics. Growth slowed down a bit, just 6%. What do they say about that?
Yeah, that moderated. Management mentioned a couple of things. Higher rebates in the U.S., partly because of the Medicare Part D redesign changes.
Ah, the IRA impact starting to bite.
Well, that and also a new competitor, specifically in HS, hidradenitis suppurativa, which is affecting patient switching. Outside the U.S., some pricing pressures from new indications and just a general market slowdown in China were factors too.
But they still seem confident long term.
They do. They reiterated they expect mid-single-digit plus growth over the next few years, and they're sticking to their $8 billion plus peak sales target for 2029.
You mentioned the IRA, the Inflation Reduction Act. They said the impact on cosmetics is factored in and manageable. What's the thinking there? Is 30% exposure to Medicare pricing really manageable long-term for a big drug like that?
That's a key question, isn't it? Their stance is, yes, it's baked into the guidance. They know about 30% of sales are exposed, and they feel they can handle it. Now, whether that holds true over the next few years as negotiations really kick in, that's something everyone's watching closely. For now, the guidance reflects that view.
Okay. And lastly, on the big brands, Entresto, what's the latest there? Still growing.
Still showing solid, consistent growth, yeah. They have planned for a U.S. loss of exclusivity around mid-2025. That's standard financial planning.
Right, patent cliffs.
Exactly. But there's ongoing IP litigation against one specific generic company, and that company is currently blocked from launching. So the exact timing might shift.
An IRA impact for Entresto.
They expect it to face IRA pricing starting in 2026, but they think the net price will probably stay around where it is now.
Okay, so beyond the current blockbusters, this call also gave some hints about the future. Right. The pipeline seems active.
Very active. What stood out to me was the renal portfolio. They've got 3 drugs there now, either launched or coming soon.
Renal, so kidney disease.
Right. Fabhalta is already out, showing steady growth. Patients seem to be sticking with it. Vafresca's in early stages, but apparently exceeding patient enrollment targets.
Okay.
And then there's Zigakibart. The phase 2 data looks really promising, meaningful reduction in proteinuria, which is protein in the urine, and its stabilized kidney function, the eGFR, over 100 weeks.
That sounds significant.
It could be. Phase 3 results are due first half of 2026. That'll be a big catalyst.
And what about that food allergy drug, Remibrutinib? That sounded potentially huge.
Oh, yeah. That one's exciting. The phase 2 data was quite striking. Patients could tolerate a much bigger peanut protein challenge after just 4 weeks on the drug. Management is talking about this being a potential $10 billion plus global market. And Remibrutinib, if it works out, could be the first oral treatment that works across different food allergies, not just peanut.
Yeah.
And it works fast.
An oral broad-spectrum food allergy drug. Yeah, that would be massive.
It's game-changing for patients, definitely.
But maybe even more revolutionary sounding was this YTB program, the CAR-RT for immune reset. What's that about?
Okay, this is really cutting-edge stuff. YTB is a rapid CAR-T therapy designed to basically reset the immune system in autoimmune diseases.
The immune reset.
Yeah. The early phase 12 data they shared, specifically in severe, hard-to-treat lupus SLE, it was remarkable. Very strong lasting improvement in disease activity for up to a year.
Seriously.
Seriously. So now they're pushing this forward across like 7 or more autoimmune conditions. Pivotal trials are starting. They're hoping for filings in 2027 based on strong data, maybe launches in 2028.
And the potential.
They see it as a multi-billion-dollar opportunity, but honestly, if this works the way they hope, it could fundamentally change how we treat autoimmunity, a true paradigm shift.
Okay, wow. That's definitely one to watch. Shifting from the pipeline to broader strategy, U.S. drug pricing came up. What was their take?
Well, they framed their discussions with the administration as productive. Their stated goal is twofold. get other developed countries, OECD countries, to pay more for innovation.
Right, the fair share argument.
Exactly. And at the same time, reduce out-of-pocket costs for U.S. patients, partly by targeting intermediaries, PBMs, and such. They really leaned into the idea that the U.S. drives innovation and shouldn't bear disproportionate costs.
It's a familiar argument in the industry. How about China? They mentioned the slowdown there.
Yeah, they acknowledged the broader market slowdown. They've reset expectations for their China growth now to high single digits or low teens. That's quite a step down from the 20% plus growth people got used to seeing there.
Still growth, but slower.
Right. But interestingly, they highlighted Leqvio doing surprisingly well in the out-of-pocket market in China, which might give them ideas for launching other similar drugs there, bypassing some of the usual reimbursement hurdles.
Adapting strategy?
Yeah.
Makes sense. Capital allocation was another point.
Yep.
A new $10 billion share buyback.
Yep, a new $10 billion program running through 2027. This comes after they just finished a bigger $15 billion one.
Okay.
They were quick to emphasize this doesn't mean they're stopping M&A. They still want to do value-creating bolt-on deals. They call it a balanced approach.
So why only $10 billion this time after $15 billion before? Is that sending a signal about M&A appetite, maybe? Or something else?
That's a fair question. Management explained it by saying the previous $15 billion was unusually large because it was partly funded by selling off a big stake they held in another company.
Oh, okay.
So this $10 billion, they presented it as more of a return to their normal rhythm, balancing buybacks with keeping powder dry for BD&L, business development and licensing, and those bolt-on M&A deals.
Got it. Less of a strategy shift, more back to baseline. And finally, there was a big leadership change announced.
Yes, the CFO. Harry, who's been in the role for 13 years, a long time, he's retiring effective March 15th, 2026.
Okay, end of an era there.
Pretty much. But it looks like a smooth transition. Mukul Ma, who's an internal veteran, is stepping up to be the new CFO starting March 16th, 2026. Markets usually like seeing that kind of planned internal succession.
Yeah, signals stability. Okay, great overview. Now let's get to our favorite part, the This Is Not Financial Advice segment. Time to pitch an outrageous, but maybe, just maybe, plausible trade idea based on all this.
All right, let's have some fun with this. Given everything we heard about the YTB Immune Reset CRRT program, the early data, the huge ambition, here's the thought. What if you bet on YTB not just being successful, but wildly successful? Like it completely rewrites the playbook for treating autoimmune diseases, so much so that it gets an accelerated regulatory path.
Okay, accelerated pathway.
And the total market it addresses ends up being way, way bigger than even the multi-billion-dollar number they're throwing around now.
So the outrageous part is the scale and speed of adoption. Like imagine this disease reset idea is so compelling in the real world.
Exactly. Imagine doctors and payers jump on it way faster than usual, not just for the super refractory patients, but expanding its use much quicker across different indications.
Which shortens the time to market for those extra indications.
Right. And suddenly, by, say, the end of the decade, you have this entirely new class of autoimmune therapy that's way bigger than anyone modeled, making all the current forecasts look, well, laughably conservative.
Because the immune reset concept justifies faster, broader use, maybe even a premium price that you just don't see with traditional biologics and autoimmune. It changes the whole game.
That's the kernel of the idea. The transformative potential could justify an adoption curve unlike anything we've seen in this space. It's a long shot, but based on their early results and vision, maybe not completely impossible.
Okay, definitely fits the outrageous but plausible bill. Fun thought experiment. So let's wrap this up. To recap our deep dive today, this company put up a really strong Q2. We saw double-digit sales growth, great margin expansion, solid execution on key drugs like Kisqually and Scemblix. They raised their bottom line guidance for the year.
Yep, and the pipeline looks really interesting. Pluvicto moving into earlier prostate cancer, Remibrutinib potentially tackling food allergies broadly, and of course that potentially revolutionary YTB Immune Reset CRT program.
They also talked strategy navigating U.S. drug pricing, the China slowdown, keeping capital allocation balance between buybacks and deals, and managing that smooth CFO transition.
It painted a picture of a company executing well now, while also making some pretty bold bets on the future.
We certainly hope breaking down this earnings call gave you a much clearer picture of where the company stands and where it might be heading.
And just our standard reminder, everything we talked about today, it's purely for informational purposes. It is absolutely not financial advice.
Please Always talk to a qualified financial professional before you make any investment decisions based on, well, anything you hear anywhere, including here.
Definitely.
So thanks for tuning into the deep dive. What was the biggest thing that jumped out at you from this call? Something to think about. Until next time, stay informed and keep an eye on those tickers.